The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone, on this very first day of June, June the 1st, Thursday, and this is the 8:06 edition a.m. Eastern Time. It'll be replayed at 10 a.m. I'm not able to make that time today. So we're looking at the futures down 21 at 32,958. I had a Chapman Wave high trend gauge reading yesterday, which suggested there should be a 9 to 12 point rally in the futures market within two sessions. Well, last night we got that. Look, we got this very, very interesting pattern all the way from a low at 22. That's 10 o'clock last night at about 41.80. It just ran up all the way to the 42.03 level, and now it's trading at 41.96 in the futures. So as I read everything at this particular moment, wow, talk about a bifurcated market. What we definitely have is over the month of May, you saw the Dow make lower lows and lower highs. The S&P made a new recovery high. So we'll look at the E-mini right now. This is the continuous contract 41.96. Went to a peak D in the daily, right in that inside track repellent zone, right there. And now we're going to see how much of a pullback we get. So far, everything's very gentle. I don't think the politics, the political side of it is so much a factor. I think the economic side is going to be much more a factor. What we're looking at here is, I'm going to get to it in a moment. Let me just finish this. I want to get that. There it is. B, F/C, and here we get to our D. And now we've got Ds all the way around in the SPY, the S&P cash, and the futures. I haven't got a sell signal yet. It has to dip a lot more than that. So if I'm going to the cash index, SPX right here, the cash index says key support is in the 4140s. A close under 4140 suggests that we've broken again this inside track propellant zone becomes a repellent zone, and that suggests that the weekly chart is going to pull back a little bit further. It doesn't say major turn down, it just says be ready for some kind of a digestive moment. The upside is becoming a little bit limited. Looking at the QQQ, just a spectacular move, especially those 4 sessions. It's already 3 sessions from the doji low of 4 sessions ago. Gaps up, doji candle, huge green candle follows, big red candle on Tuesday, and then Wednesday we got the pullback, little doji candle there, and that's just suggesting you've got to be a little bit careful here. As far as positioning is concerned, I can see a pullback here. I do see some residual strength. I wouldn't be surprised if it's kind of a choppy market today. It tries to rally. The Dow kind of goes positive. The S&P goes positive, and then it goes negative, and then it goes. So a fairly narrow close. If, in fact, we start to see a much deeper correction on the downside today, that is, when I say correction, I just mean intraday, that means the 345s is going to be tested 2 points down from here. And that's going to be key because after, I'd say 220 this afternoon, if the S&P is down more than 5 points, that means we're going to close negative. But in the meantime, there are just little whipsaw waves that are coming in of buying, especially end of the month and beginning of the month. And I think that's going to kind of hold things up for a little bit. Job stuff will probably generate some sort of movement. Oh yeah. Those are the things I'm looking at right now, much more than the political side. Everything there seems to be running smoothly. Let's go to the SMHs. The SMHs had a fabulous spike to the upside, going basically from the 127 area all the way to the. I didn't type that in. I should have typed that in. I thought I had, but I hadn't. So the high on Tuesday was 151.71. 151.71. Wow, that's such a big move in such a short period of time. 159 is the upside target in June, and the downside key support is going to be at 139 to 135. And now we're looking at the IWM, Russell 2000. Russell 2000 is 174.15, up about 38 cents pre-market. Oh, I should, first of all, I'd like to say thank you to all of those who attended last night's, that webinar that I was the guest speaker at the Boston Investors Group meetup. Had good questions. I covered almost everything I wanted. I wanted to show as many different aspects to show that even within sectors, you can get some variations, but that the divergence between the weak areas, and there are so many weak areas, and the strong areas, and that's just mostly tech that's been suddenly come alive. It wasn't before, but it has come alive over the month of May. The others were not doing well. The steel sector, the copper wasn't doing well, although copper today, look at this. This is not bad. Just on a very short-term move, just started leg B, trying to bounce in the weekly chart, went to support, key support, it's trying to rally here. But when you put the whole thing together, there's a lot of internal weakness. If you look at the stocks like Home Depot, this is just telling us that you might get the IBT, which is the ITB. ITB, the iShares U.S. Home Construction, doing very, very well. Did make a peak D in the daily and a G/C in the weekly, and the monthlies had a really nice leg C to the upside. But this is what I'm talking about. If you look at this home construction and you put it together with the HGX, which is the Philadelphia Housing Index, going up to resistance, also made a peak E at 497 in the daily and is now trading at 470. That's 27 points. That's about a 6-7% pullback in a very short period of time, and a little double top here in the weekly. I think that the downside is starting to loom as not a serious decline, but as a digestive phase coming, and I think it's coming in these first 2 weeks, starting up in these first 2 weeks of June, making the upside limited. Doesn't mean to say you can't get it, but I think it's going to be very selective. I wanted to go to the gold. Gold is up a little bit today. Gold is up $1.50 at 1983. Yeah, it's stuck in that lower range. It keeps making lower lows and lower highs, just like the Dow, actually. The technicals are kind of weak. I don't think it's going to break above 2020 in the next few days. I think more likely it's going to retest the 1960 area. But that also depends. Let me just do silver. Silver's also kind of in this containment area at 23.59, up 0.03. Now, within... Yes. So within this context, silver is in a digestive phase. In the daily, certainly, and the weekly is just starting that. I would say that by tomorrow, I'd probably put silver weekly chart at a sell signal, maybe even a sell mode. The daily is already in a sell mode. Let me just quickly go to the dollar to see where it is. It's down 18 ticks at 104.04. Upside's limited, but it keeps making new highs, new recovery highs. I'll be back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks, we're back. So the job estimate was for 170K. Thanks, GS Mike and Dan. And they added actually 278,000. Ooh. So that's what I'm talking about, that the economic numbers here are more worrying to me than anything political. I suspect that that's going to worry the market over the next coming weeks. What happens next? What does the Fed do? And let's see. So for what it's worth, I keep mentioning we have never ever had a recession when the UEM. Okay, I didn't see the end of that. Yeah. So this is a very unusual situation in the sense that when we're looking at all the numbers, it's one thing. But have a look at this. Let me show you something very interesting. Look at the TLT. The TLT is dropped 30 cents today at 102.69. It's had a really strong rally over the last 3 days. It took out about a week and a half's worth of trading. That's the iShares 20-year Treasury bond ETF. But most importantly, we are still stuck in this range. Remember, I drew this rectangle in, and I mentioned we could stay in this rectangle for quite some time. I don't see the rates as being an issue. What I do see is the Fed's decision. They are making decisions on, I showed you. You've got the whole area of housing. You've got the whole area of jobs. You've got stock like Cintas, which is the overalls, uniform, rentals. It's the whole area of hotels, restaurants, anything where uniforms are used, and they either rent them or buy them. And that's been on a tear. Look at this. It's at 472.30, up 16 cents right now. And the all-time high is up in the high 470s, 477, 478. This is darn good action. So the Fed is just they're torn apart by saying we've got to tamp down. We've got to get the jobs numbers. We've got to decrease those job numbers because that's the only way we're going to get deflation down. And then, like I did last night, I go through all these. Look, it's bouncing today. Wheat is up 15.5. But it all of May was down. Soybeans, all of May was down, bouncing today, up 19. All of corn, up until most of late April into early May. Now it's bouncing some. That's part of the deflationary aspect. Crude oil, look at this crude oil chart. There's this lowercase h that goes to a lowercase m, and then it breaks key support. It hasn't happened yet in bonds, but we're watching this very closely. So this is just saying that even the area of crude oil is helping. The XLE. Did I do the XLE last night? I think that's the one thing I might have forgotten. No, I think I did. There's the S&P Energy Select Spider Fund. Made that rectangle formation with the arch within that. And it says, just be careful, because if it breaks halfway through, this is a monthly chart. Well, it did close halfway through the high and low of the boundaries of the rectangle. And that just says, ooh, be careful, because the XLE could come down to the 72, 71 area, and here it is at 76, 79 right now. But it has support right here in the arch formation of the daily at that. This is the XLE S&P Select Energy Spider Fund, and 75.36 was the low on the 16th of March. Here we are, 3 months later, 2-3 months later, and we're close to testing that low. If we take it out, it means that the weekly chart not only has a broken key Chapman Wave inside track propellant zone to make that a repellent zone with a dreaded H right there, it means it takes it out yet again, that left side low. So I'm watching these very closely to say if we're looking at leadership, the SMHs, that's the leadership. And today they're down 14 cents. I think there's going to be there's more of a digestive phase coming up. Question came up, do I think that the semis make new highs in 2023? And I think, I believe they will. I believe they're going to break the 159.42 high of November of 2021. And they probably will trade in the 160s at some point. But we've got a digestive phase, got very overexcited. The AI, that's bots, that is the Global X Robotics and AI ETF, is up 7 cents right now. It hit 28 round number. We are long. For subscribers to the opening call, just want to make that to clear that up. So what we're looking at here is, it could pull back all the way into the 26s, even the 25s. It would be a perfectly normal pullback after such a spectacular move, straight line move, basically, all the way from the 24s to 28, 4 points in an index. That's quite a lot. So we're watching that. I had mentioned Hack the other day that I would like to see a pullback in it, down 44 cents at this point pre-market at 48.99. It made a new recovery high, in fact, a yearly high yesterday, going to 49.48. Let me just type that in. And I would love to see a pullback. This is an area that we've been in before, but haven't been in for a little while. Oops, 49.48, I think it was. And I think this is in play. So I'd love a digestive phase to unfold right now. There's so many stocks that are looking very interesting. Now, one question I had that I didn't get to was, FXI. This is the large cap China ETF. Let me just get this right. FXI trading right now. It was weak yesterday, and today it is down 11 cents at 25.86. Yeah, this has gone to, I'm using Fibonacci at 38.2. It's holding support, but I can just tell you that at 25.97, if it starts to trade in the 24s, this is coming anytime between now and next week, and then takes out 24 support, that's a big problem, telling us about a larger context for China. PLTR, I think I mentioned this yesterday. Palantir Technologies, Inc. develops data fusion platforms. Leg B in the weekly chart, leg B in the monthly chart, leg D in the weekly chart, and a peak D in the daily. So where would I enter? If you aren't in it and you haven't been in it into this rally, I would just hold off. It might mean that there's going to be a spike going to another high, but I'm suggesting to you that if you have patience, this whole area here, I'll just draw it in to say this is where I'd be looking at it. It doesn't have to be a full give back of everything, but I think a 50% retracement of the move that started around about the 15th and the 9.14 area, that's where I'd take it as the midpoint, and I'd go to between 12.20 and 11.90. That's where I'd say if you miss this move, that's an area that I would consider maybe starting a position. But give me a yell, we'll look at it together. So that was PLTR Palantir trading at 14.42, down 29 cents. This is we'll be getting to 8:30, whatever event is coming up at 8:30 economically in a moment. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly Gold Report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, we're back. Whoops, economic news just came out. And look at that big spike and pullback in the E-minis. Winter leg C is just going to be, I don't know what the story is. Maybe someone will tell me what happened. I'm looking at this, and we'll see whether or not it can hold. The S&P futures up 3.7, up 4.25, up 4.50. Kind of doesn't know which way to go, but mostly it's holding green. We'll see. Well, we'll give it a few minutes. Let's go on now. What we want to look at is the VIX index. What does the VIX index tell me? Oh, and I didn't do a single thing on the VIX index last night. Oh, what a pity. I got so many things done. I must have had about 40 different aspects of the different charts, etc., that we were looking at. All right, 17.22, down 72 cents. and that's suggesting that the volatility index under 20 is still telling us that buying pressure is there. I think the buying pressure is still here just in the shorter term, and then I think we start to get kind of flurries. I'm watching it closely. I'm really disappointed at the XLF. So VIX index, if you start to see the index trading, you can't just hit it once. It's got to trade above 2130. Trading above 2130 and then closing above 20 would say, uh-oh, watch out, triple-digit pullbacks in the Dow, sharp pullbacks in the S&P. But until then, I think it's just choppy with a slight. Now I think we're going to have a slight bias in the overall market just for a couple of days. And we might see the SMHs in that area start to, the AIs, start to pull back a little bit more. So that's what I'm looking at there. But what I wanted to do is to go to the XLF and say, wow, it's up 11 cents at 31.87. It's just been terrible. And the KRE, which we tried to, we bought and just had a position, we got out of it with a very small loss. I just thought it was acting well enough to try for a leg C above 42. No, it pulled back. That's the regional banks. I want to see these regional banks rally. I think it's really important to get the money center banks to hold steady and to sort of lead the way. And then these small banks, the smaller, they're not, some of them are not small at all, but they're smaller. And certainly we're looking at a lot of local banks. And that's what keeps the economy going. I want to see these things moving well, and they're not. So that's the reason why when you talk about a bifurcated market, in a really bigger sense, you've got a huge bifurcated market in that the whole cyclical area, it could change in the next week or two. But up until now, they've been really weak. All this, I mean, Caterpillar, look at this. Caterpillar trading at 205.75, made a new yearly low, in fact. This is not good. It's just not good. Made a peak D in the monthly chart. I'm kind of worried about that. Deere, there's another aspect. Look at that, another low. Oh my goodness, this is not good. PAVE, this is the Globex U.S. Infrastructure and Development ETF, just sideways, not doing very much. Look at this. This was such a big surprise to me. The XLP. This is when things are weak. You usually see the select consumer staples. The staples usually do very well. Well, they were doing well, but look at this peak D in the weekly chart. Look at that triple top. And now look at what we've got peak D in the daily. How many peak Ds have we had? And all of a sudden, you're trading from the 77s to the 72. 5 points doesn't sound a lot, but it's telling you that the sector that should be holding well. I mean, look at Coca-Cola. Coca-Cola hits the 64 area, and now it's trading at 59. Same sort of pattern. Look at GIS, which is the General Mills, makes a peak G and Chapman up around about 90, trading now at 83. It hit 82 the other day. I'm telling you, this is such a select market, and as a result, you have to be looking at. Wait a minute, did I just do that? Sorry, I'm just looking at something. Yes. Ooh. Okay, so what we're looking at here is within the context of the overall market, it's becoming even more selective. And that's why I'm saying the upside is probably limited at this particular point. ADBE, yep, ADBE is doing really well. Now, this is very interesting. I have it at a peak B. That's because the 331.99 low that was made was above the previous high, but actually I needed to, I was going to do this last night. I showed it and I'd mentioned it, but I'm going to do it now. I'm calling this an alternate count, F/B. And the reason being, right here, F/B. Reason being, it did not take out the low that started the whole move before, which was down in the 318.60 area on the 24th of Feb, 318.60. So in that regard, 318.60, what we are looking at here, I think, what did I say, 224? I'll put that in, I'll change it if it's wrong. This is a continuation pattern. but it did the left side, right side price time match in a quicker time. And the other thing that we're looking at is the digital marketing cloud, Adobe, AI. It has everything going for it. It's holding very nicely. Now it's pulled back 5 points. It's at 413. Did it have earnings or something like that? Whatever it is, that's a pretty sharp move, and it's gone back. Remember, when you break out like this, that left side high, the first one is way back here on the 2nd of February of 402.49. The second one is this peak right here on the 5th of April at 386. And where are we right now at 413? So this is going to be major support. So where you just wanted me to look at it. I'm looking at it and I'm saying I would consider Adobe to start a position a little bit lower. It's at 413 right now. Give it just another little period of time between 408 and 402. That's kind of where I'd be looking at it to say, hey, is this the time to be getting? But you can see the on-balance volume is very overbought, but the stochastic's flat at 90%. That's very good. So as that stands, I'm looking at it and saying, I'd like it in this second cup formation to pull back towards the lip that was made earlier on, way back in February. So if you're along, yesterday, if you asked me about it, I would have said, I like it very much. Is this a situation where it is a B and not an F, and that you need to take just a little bit of money off because that's such a spectacular move? Or is it where you haven't got and you'd like to be putting money to work? And if the case is that you want to put money to work, I'd wait just for a little bit longer, another pullback, and then see how it holds. XGX, I did that. Let me just do that again. HGX, which is the Philadelphia Housing Index. At this point, I think it's going to test this low right here on the 26th of April, 456.59. It's trading at 470. So that's what I'm saying. I think a little choppy couple of weeks coming up here, and then we're going to see what happens. Now, the most important thing about the HGX is that if you do a measured move vertical from the high that was made the week of February, I think it was February. Yeah, February the 3rd, 484.03 was the high. Look at the MACD and stochastic. This May at 497, even higher. The MACD was good and stochastic was good, but now it's pulling back. I'll talk about it when we get there.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we're back, and the HGX is the Philadelphia housing sector. Look how the monthly chart ran right into the inside track repellent zone, pulled back a little bit from there. If you do the vertical count in the weekly chart, you can see that the MACD, the 9 period is over the 14, price is way over the 9. The MACD is good. Stochastic made an M-shaped pattern before pulling back sharply. The price did go under the 14, but never went, the green remained. It didn't go pink in the 9 period moving average. It's still very strong. The MACD now has made a large M-shaped pattern. The stochastics made a kind of a U shape with a double top, lower than it was before, but none of this is negative. So it's price that's going to be the arbiter of the trend. And right now, on the short term, I've got a sell signal in place, not a sell mode yet. I have to wait another day or two. And the weekly chart still hasn't given any signal. It's still in a buy mode. Most importantly, if it starts to trade as a 470, under 463 or 465, let's say it's 465, then there's a real good chance that it's going to test the left side. No, didn't I just do this? Left side low of 456.59. Yeah, that's the area that you got to watch closely. So 465 to 463 is really the first decent support. If it takes that out, it's going quite a bit lower. And then you've got a big rectangle formation that says you can go towards the lower part of the whole range. So this is the most important moment. And we're looking at, I don't know what the economic news was at 8:30 this morning, because the market, the E-mini took a bit of a dive. So let me just do this because I'm doing the show. This is 8:44 in the morning, 8:45. It'll be replayed later at this will be at 11:45. You have a 11:45, the Dow, which is the futures, are now down 91. And I tossed and turned. I just kept thinking we missed going short yesterday by 5 cents. And that would have been okay just to be in that position then and work around it. But I didn't want to get any new positions this morning. I see enough residual strength to try to rally a little bit. I see enough weakness to say we'll curtail the rally. So you're stuck in a narrower range. And I think that's really what we're looking at so far today. So so my show is 10 to 11. But I would say if after 12:30 this afternoon, going into the 1 o'clock to 2 o'clock period, if the Dow is trading more than 80 points lower, I don't think it's going to make it up by the end of the day, and we'll see a weak close. But if it even gets to minus 30, and the S&P, which has been a little bit stronger than the Dow lately, if the S&P is actually up about 5 or 6 points, then I think we can close a little bit higher, first day of June. But I do think that June, this early part of June, is going to see a lot of choppiness and a lot of testing of support levels. And that's how, so the HGX is kind of a good example of what I'm looking at here. There are certain sectors that have had good moves up, and now they're going to digest. But that's interesting because I'm talking about the housing sector. So once again, I just wanted to go to the TLT. TLT trading right now at 103.05, up 6 cents. So there's a trend line I'm going to draw right now, because I like to draw as many wicks, the ends of the wicks, not the body so much as the wicks. If I can do that, I can get a really nice trend line. And look, here it is. So I cut a couple of them, but that's basically the line that I would use. You say, oh, but wait, you missed that, but I got that, missed that, got that. So it's on an average, because my eye says this is the perfect trend line that I would draw. I would change that under other circumstances, but this does it for me. And that just says that if the TLT, and this is going to be very interesting, if the TLT is able to close above 104.20 in the next 2 days or so, and then yields will start coming down, that alleviates some pressure from the general market. But the consensus is that yields will go up because the job numbers are still very high. Wow, what a conflict, what a tough decision the Fed has to make, because theoretically they should stick to plan, but there are a lot of undercurrents that say, ooh, this is different to usual. We've never been quite in this situation, and a good part of that is because so much money was dished out during COVID that it's still filtering. It's starting to filter out now, but it's still, I think, there, and that's been giving. I think that's helped the economy a tremendous amount. All right, so now what I want you to do is, you did that. I haven't done everything that I usually do. Yes, I did that. Oh, okay. A question came in about ARCT, Arctic something or other. Is that right? ARCT. Yeah. Arcturus Therapeutics. Wow, these therapeutic stocks, unbelievable. So this is trading at 27.34 yesterday. Today it's trading up, pre-market up $1.16 at 28.50. So let me just put Chapman wave notations. Always identify the most obvious lowest low bar, and then you just count. You just use the alphabet and you go peak A, first peak, second peak is peak B, unless there was something before. Yep, there it is. Comma said that's an A there, and that's a B right there. So that makes it C, D, and D holds for a little while, and then it pops, and that looks like an E right there. So this did give a sell signal, but it didn't do very much. And then it did another. Once you've used up your down arrow and you get another signal before D, you have to put this inverted cap, V, inverted V. And that just says, look, almost like a head and shoulders. But today it's popping to the 28s over there. Yeah, I still say that this is doing really nicely. If you look at the whippiness of the weekly chart, you can see that's going to be right there, A, B, C, D. We're looking at ARCT trading at 28.50. If I can actually read it, Octanus. Is that a holdings? Yeah, therapeutics holdings. Okay. So this goes to an A, a B, a C, and a D, and then a brand new. I always go EF in cases like this and just say it could be a B, but I'm going with the continuation pattern. And okay, so as I'm looking at it right now, this is what I'm looking at. There's a chance that it makes. I'm just putting in the rectangle right here. Right there, narrow rectangle with, except for these 5 or 6 candles that spike to the upside. So this is almost like a head, a shoulder, head, and shoulder pattern. If it starts to trade in the 31 area, that breaks that pattern altogether. It becomes a U-shaped pattern with a retest of the previous high. At this point, I think it's just stuck in a range. It's news related, and it just keeps popping up. But the magnet of the 27 to 26 area is really strong. I just keep in mind 27 to 26 is very strong support. I'll have to see him again for my gas guzzler. All right. Other Myrna company. Okay. So there's just one. I've been asked a couple of days ago about Myrna, which is Moderna, Inc., biotech, COVID, many other trials going on. It had a big spike about a week ago, and then it failed. This is just saying to me, Myrna is not ready for prime time. It was, and now needs to rebuild it. Probably, I'm going to say that by late July, August, I think it's up in the 150 area, but it's got a lot of work to do before it can get there. I hope that helps. I'll be back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, last segment, and this will be replayed at 10 o'clock. I'll be back tomorrow at my regular time for the Friday, Technical Friday we call it, because I do a lot more work based on the Chapman methodology. But meantime, back at the ranch, the Dow futures is down 108. So the Dow is, again, much weaker than the S&P. The S&P futures down 50 cents at 41.90. And the NQ, I didn't do that, NQ is trading down 7 at 14,249. I think they're going to take a little bit more of a breather. There's just enough strength to say you can have another spike maybe into the 14,500s. But my eye basically is saying that by sometime next week, we should test 14,050, 13,950. And that's going to be the test. If it breaks under that, it's going to go quite a bit lower in the shorter term. So with that said, just got to be real cautious. I'm recommending having cash because we're going to see some really sharp, sudden moves in certain stocks that have been really good. And those are maybe the ones, the leadership here should be the leadership for most of the year, but you want a decent pullback. You know, I'd be reluctant to be buying stocks that would be making new recovery highs or all-time highs. Just at this stage, I'd much rather have a pullback. So with that said, I'm going to hand you over to Tommy Jr. for these morning market kickoff. Great show. Talks about these things in a fundamental and technical way. Really terrific. And he goes through option positions, has great interviews. then I will be back tomorrow, and I'm going to sign off. Am I actually signing off a little bit early for a change instead of talking through the break? Well, as it stands right now, just be a little careful. There is shakiness in the market. It's become very, very selective. I'm disappointed that the financials so far are not showing any strength. You want to see strength in the financials. So with that said, waiting for the music to come. It hasn't come yet. A little bit of a bounce on the E-mini. Oh, there it is. All right, well, have a great rest of the day, and I will see you tomorrow. Basil Chapman signing off. Check out my Before My Date.